You said to me back in May that you thought the market was the most overbought that we've seen since 2007, and then you thought we would see a pullback in July, September, October. Now we're seeing the market, this sell-off right now, this global sell-off. Is this the sign that this is finally about to happen?
I think so, and we've seen signs of weakness really over the last month, so it's tough to blame this just on geopolitical worries or what's happening with Argentina right now, or really anything with regards to earnings or macro. It's more the fact that fewer and fewer stocks have started to hit new high territories. We saw it almost a couple months ago when small caps started to pull back. We had a mild rally, now they're selling off again. When you look at the Russell 2000, the industrials, the transports, and the semis have all started to turn down as well, break trend lines. Today the S&P is finally following suit, which have been the lone holdout. So I do think it's important. I think that if the S&P can't regain what we've done today, then we'll head down to at least down near 1895 to 1900 in the short run, which is not a big move by any stretch. The key is going to be, I think, when the NASDAQ and some of the other bigger tech indices start to pull back, and they really have been pretty resilient when you look at the comp and the NASDAQ. But you started to see this in Europe a month ago, and the rest of the world started to sell off, and the U.S. was resilient, but slowly but surely we're seeing signs that we are going to be affected here as well.
Right, you mentioned seeing fewer and fewer stocks hitting those highs. When we do look at those 52-week highs, the 200-day moving averages. Now, when we look at the major indices, what signs have you seen of trend deterioration so far?
Well, some of that has been in regards to the advanced decline, which peaked out in early July. We saw what I like to call negative momentum divergence, which means all throughout the month of June and July, the S&P tried to move higher and higher, but yet momentum did not follow and actually went lower. And that's oftentimes a pretty big warning signal to really pay attention to. Today's the confirmation, though. Today's the real break of the 3-month trend line really since April, and really following suit on what's been happening with the other leading sectors such as the semiconductors within technology, the transports, the industrials. Beginning of the year, really the sole weak sector was consumer discretionary, and people wrote that off and said the market's fine, and it was. But now when you start to see industrials and transport start to join suit, and yesterday with the utilities also breaking down, more and more stocks are hitting new lows. You have less than 50% of all stocks right now in the S&P above their 50-day moving average, and so the S&P and some of the broader indices have really been a mirage, I think, to the underlying weakness that's really been present over the last month, and now is finally starting to show real signs of being a reality.
Looking back in April, we did see a lot of biotech stocks, tech stocks get hit pretty hard, and we have gotten a lot of those tech earnings out the last couple of weeks. We will hear from Tesla after the bell. Do you have any sort of indication of your thoughts on where you think the best level of support is for that stock?
Yeah, it's interesting because this stock almost doubled between the months of November and February of this past year. And it went from, I think, 120 up to nearly 260, and it's since been consolidating. If you look at the options market, the front month volatility is up about 20 points from where the back month is, so it's trading about a 60% vol. So in this tight range, it is anticipating that we could see a big move for Tesla and potentially a breakout of this bigger triangle. I'm looking at 209 to 214 as being an area on the downside, and that's right near July lows. It also hits a bigger trend line, so it's a 5-point range of support. If it gets below there, we'd have the potential of seeing real weakness. You saw some signs of slowdowns and really guiding down of their earnings really over the last few months, and that's a little bit of a concern. But the revenues, I think, and the amount of cars they've been able to ship to China and Hong Kong, all these new markets that have opened up, is definitely encouraging. They have a bit of a trademark dispute, I know, with their X car, but once I think the SUV that's due to come out next year. But yeah, the signs are encouraging. The one thing to look for is China, because they're a huge consumer, obviously. It'll be something to watch. And I think the deal with Panasonic also with this battery plan has to be considered a positive as well. So my thinking is we should see above average volatility in the stock, just given the tight range it's traded in over the last few months. So I'm looking for a breakout, and given the market, I mean, potentially it could be initially to the downside. We'll have to see what the numbers support.